Hello. Globally, stock markets have been in a bull run since April this year. Most markets have appreciated by more than 40% from the low levels of March. Nifty is up by more than 40% from the March lows. There are mainly three factors driving this bull run in the markets. One, globally, central banks have been creating huge liquidity to tackle the recession, and a major part of this liquidity has been coming to the stock markets. Second, interest rates are at historically low levels, and when interest rates are low, more money will be moving from debt to equity. That's why markets are bullish. And thirdly, there is an expectation in market circles that economic growth and corporate earnings will rebound in 2021. These are the three main factors driving this bull run. How long this rally will last? When a correction is going to happen? How sharp and deep that correction will be? These are questions for which there are no clear answers. A major trend in the markets now, a mega trend in the Indian stock markets is the return of the retail investor. There is a retail stock rush. Large number of retail investors are opening accounts. Almost daily the number of accounts being opened are increasing. This is a welcome trend. This is a desirable trend. Financialization of savings and channelization of financial savings into financial assets is good for the investor, it is good for the economy. Therefore, it has to be welcomed. Also, most of the accounts are being opened from tier 2 and tier 3 cities. So that way, there is a decentralization of stock ownership, a sort of democratization of stock ownership. This also is a welcome trend. However, there is an area of concern. What is that area of concern? Most of these retail investors, the new millennials opening accounts, are chasing short-term gains in the market. Stock market wealth creation is not about short-term gains, it is about long-term gains and long-term investment. Of course, it is up to the investor to decide, it is up to the individual to decide whether he or she should be a trader, a speculator, a player in the derivatives, a short-term investor, or a long-term investor. That is the call of the investor, that is the call of the individual. However, there is a very important distinction which has to be kept in mind. Trading, speculation is about short-term gains. Trading is a zero-sum game. One person's gain is another person's loss. Investment is not a zero-sum game. Investment is all about long-term wealth creation. In trading, the risk is high. On the other hand, if you are investing in good quality stocks and making systematic investment through mutual funds, the risk is very low and the possibility of wealth creation is very high. This distinction is very, very important. Another major trend in the market now, an unhealthy trend, a disturbing trend, is that a large number of low-grade stocks are moving up, are going up. Even the stocks of many bankrupt companies have been going up. Many low-grade stocks are locked in upper circuit for many days together. And the prices of many of these low-grade stocks, also called penny stocks or cats and dogs, their prices have doubled, trebled, quadrupled in a very short period of time. This is a very unhealthy and dangerous trend. Why is it dangerous? Well, the bull market cannot continue for long. There will be correction. And if the correction is sharp and swift, and if there is a bear onslaught in the market, blue chips will easily survive a bear onslaught. Blue chips will easily survive corrections in the market, but these cats and dogs, the penny stocks, will be smashed in the bear onslaught. Cats and dogs will be slaughtered in the bear onslaught. So retail investors who are investing in these stocks are likely to be badly hit in the long run. This is the history of the stock market, and this history is likely to repeat. The best insurance in this very volatile and uncertain market is to stay with quality. So invest in quality stocks, stay with quality stocks, avoid cats and dogs, remaining invested in quality stocks, remaining invested in good mutual funds, continuing with your systematic investment plans is the best insurance in this very volatile and uncertain market. Invest safely, stay safe. Thank you.